a very exciting journey, new journey where we are rebuilding ourselves after our sale of our product division, and we are now concentrating our energies, backed by this debt-free balance sheet, which we have now kind of inherited into next generation technologies as what we kind of build for the future, and also kind of reorganizing our growth engines. We've been able to bring in a lot of talent who have joined us, the new DNA which we are building, which is predominantly professional entrepreneurship, and we've been able to bring in lateral talent and leaders into the organization. We're building this engine. In fact, we had a global sales meet last week, which is a kind of a start of this new era. And also our run business, which we inherited post the carve out, which we are now trying to see how we could run it more efficiently, effectively, and which is and also kind of build some good global best practices in terms of global risk and compliance and a strong foundation. So that's where we are, and then we want to kind of start this new journey, and we are very excited as a team. So over to you, Devashish.
Great, sir. Thank you very much. So participant, please raise your hand to ask question. If anybody have any question, please raise your hands. So before the question queue assembles, sir, I have some questions.
Please.
The signage behind you is showing a lot of interesting thing. Whether that is IoT, whether that is digital transformation, blockchain, RPA. So if you can help us, we all know that today the demand drivers are very, very strong for the sector. So where we are today in terms of capturing our demand, what is the order book looking like? What is the pipeline looking like? Which are the areas you are seeing growth? If you can help us to understand that, sir.
Okay, thanks, Devashish. That's a good question, one of my favorite ones. Just to expand on the build part, which I spoke about, because these are two tracks which we it's kind of like two parallel tracks which we are building, which is very essential for the organization. The build is we have invested and we are investing. In fact, very senior leaders like Amrita Gagoli, she's an ex CTO of Airtel. She's advising us. So we are building this center of excellence in 5G, which is totally focused on 5G powered services. And within that, we are now building COEs for cognitive computing services. In simple English, AI/ML, because AI/ML is again a misused word right now, Devashish. Yes. Everybody talks about AI/ML. So we want to be very focused on what we want to do in AI/ML, which is true blue cognitive services. And as a company, we want to stay focused as a leader in edge. See, for example, all the products and platforms we want to develop, because now that we have sold off all our products, we don't have any more products, though we have some few products, but to really build value creating, IP generating, we want to stay focused on 5G powered services at the edge and focus on cognitive computing, which also leads to our specialization where we are investing in edge computing services. It could be edge analytics, it's edge security, and real-time decision support at the edge. So it's fundamentally around the edge. The first, if you look at it, if you've been following us, we have kind of tied up with Oracle to launch our cloud first services. So we have launched our own brand called NewRay 3i Plus, which is Oracle powered cloud services. Why? What is it unique about it is that, it is like a cloud service, which is like a one-stop shop in line with our new mantra, which is we want to be a one-stop shop who can orchestrate end-to-end services and solutions for our clients. So that is our beachhead. So the cloud first services around Oracle is something is like our beachhead, and we are building all our other offerings around it. So that's our kind of primary thing. And the biggest differentiator we would say is that it is also SASE ready. So when I say SASE in simple English, it's secure access, secure entry. So if you look at our next product, which is our NewRay Edge, which is also developed on Oracle, is a SASE product, so which is 5G compatible. So fundamentally, everything we are doing, we are keeping 5G in our thinking and building services and solutions. So today it will work in 4G, but tomorrow it can upgrade itself to 5G. So these are some of the things in which where we want to invest in the future, which will give us an edge definitely in the near term to medium term. That is one. And it will also create IP. Now to your other question in terms of order book and where our regular services revenue, definitely we are now trying to invest in the new lines of businesses. Say for example, cloud first and digital IMS is a very important service line for us. A traditional infrastructure management business is getting disrupted and we want to disrupt it. So fundamentally, all your classic NOC, SOC, everything is getting disrupted. So what we are now focusing is entire L1 and also almost 50% of L2 is all cognitive bots. We have our own platform called Maggie, which eliminates the need for L1 and L2 almost. So humans are required only at L3 fundamentally. So it kind of changes the way we run end-to-end services. I'm just giving an example of a IT help desk as an example, or it could be an application support help desk, any of the services. So cloud first becomes a big arrowhead. Even there, what we are focusing right now is we are building COEs on Oracle Cloud and Oracle focused migration in terms of, see, for example, Oracle has got a lot of legacy ERP, legacy systems, legacy databases. So we are building COEs which will focus on cloud in a box, or we say we can just migrate very quickly on cloud in Oracle. Similarly, we also have other practices. We also have Azure, we also have Amazon, but we are super focusing on Oracle because it's more like a very close partnership. In fact, Oracle is selected as one of the two co-sell partners from India in APAC, along with Wipro. So that's kind of a very important positioning we are partnering with Oracle to take it to market. And your question in terms of order book, in fact, we are just, maybe we'll shortly release a press release as well, our first, so that's a good part, see, these are good strategies. Unless until these strategies translate into real deals, then it's just a PowerPoint. So the good news is that, our cloud first strategy has worked. And in fact, after a long time, I think 3i has won a large deal in US. And where we have kind of, press release will come out shortly. The TCV could be as high as around 25 million to 30 million total contract value, with an annual contract value of around 5 to 6 million. It's a clear cloud transformation project. And it's very kind of, prestigious for us because we have won it against the top tier one who's who in US. So that's the kind of direction we are setting. And we're also now trying to change the entire gross margin mix. Because today, predominantly, if you look at our P&L, we've been struggling with our gross margins because with product division gone, and the products had really, the cream of a profit so far. And yes. 3i was predominantly a product-led company. And what me and my team have invented is the services portion. So fundamentally, it's a kind of a tough task for all of us. As I keep saying, I need to kind of fix this plane as I'm flying it across Atlantic Ocean. I cannot land this plane anywhere. So that's what we are doing. But the good news is these type of deals are now changing the revenue mix and the margin mix. So most of these deals, even under hyper competitive space for us, where we are fighting against tier ones and large global multinationals, we've been able to do it around 40% gross margin, which is pretty, commendable for our size, if you look at it. So that is kind of a trend in terms of where we are heading, Debashish.
Excellent. Sir, you have, will go to there is one question, Archit Singhal. If you can unmute yourself and ask the question, please.
Yeah, hi, sir. Pardon my ignorance here. I'm a bit new to the company, so I have a few basic questions. So firstly, if you can mention, if you were to break up the business into the key services, so what are the key services which are offered by 3i Infotech? How would you break the revenues into those key services? And then how does 3i differentiate from peers? I mean, is there something which 3i has which peers don't have? If you can touch on these, then I'll follow up with other questions, please.
Great, Archit. So probably I will try and answer that. In fact, most of what I answered, Debashish, is something which we are trying to differentiate from our peers, but I'll elaborate on that. On the primary question, in our current service lines, like any IT services companies, we have three basic services. One is IT infrastructure management services, your classic application development, maintenance, and testing services. and then your business process services. Actually, this is our classic services, which is what we inherited post the carve out. And
what would be the mix? Sorry, what would be the revenue mix between these three?
See, if you look at it from a people mix perspective, obviously the BPO consumes a more number of people but lower revenue. It's broadly around, it's kind of a very uncanny coincidence, around 1,500 is on application automation analytics. That's the new rechristened, rebooted version of the old application development maintenance services. That's what we call as AAA services, which is application automation and analytics. Which is the new line of service, which is around 1,500 people practice, which we have. And the IMS, which is your classic infrastructure management services, another around 1,500, 1,600 people, which is your typical IT support, L1, L2, NOC, and all your good stuff, in terms of your global command centers and all the standard lines of business, actually. And the balances where we had is the typical traditional back office BFSI, BPO services. So that's our split currently. In terms of revenue mix, I would say that, the BPO is very less comparatively because it's only around 15-20%, and the balance is around 50% of the revenues come from application automation and analytics, and around, say 35% of the infrastructure management services. So that's our split, Archit. And the second question you ask is, how are we now differentiating ourselves from our peers? Of course, there are two parts. 3i also is in a catch-up mode. Let's face that. See, now post the carve out of the product division, which was a primary focus, we are in a path. So we have got two strategies running. One is to be on parity, which is what we call as the grow business, which is where we want to offer, everything is digital, right? You have old school testing. It's now digital testing. What you used to do with 10, 100 people, now we can do with 50 people, along with bots and humanoids working together. You just need half the number of people. So everything is now digitized. The other example I gave you, a typical NOC service, your L1 is totally automated. You've got cognitive bots doing it L2. So humans are at the L3. So that's where we are now offering as our regular services. We got our own platforms like FlexSim, which is a digital testing platform. We have Maggie, which is our IT help desk platform. So we have multiple products like that. So that's our mainstream in terms of service lines which we offer. And as I spoke to you also, the cloud in a box is something which we are now perfecting. And we are also now trying to see how we can differentiate with our peers in terms of commercial engagement models also. So where we are trying to do is from unlike a typical technology company, we are also trying to see how we can align our deliverables to our customers' business KPIs, and also try and see how we can have different commercial engagement models. So that is also some of the differentiation we are looking at it. In fact, the US deal is a classic example how we were able to win against some of the tier ones. Is basically because of our ability to kind of innovate and give a different kind of a commercial value proposition to our clients, Archit. And definitely, we want to differentiate in the edge space, as I was telling Debashish also. 5G powered cognitive computing services and edge ready services will be our mantra way forward. So whatever we do will be around the edge. So we want to be known as a company who specializes in the edge, computing in the next 2 years from now, Ashit.
Understood. That's helpful. And at the start of the conversation, you mentioned about AI, ML, and next generation services. So can you talk a bit more on those? What are you trying to do? How big that can be over next 3-5 years as a percentage of your total business?
No, great question, Archit. If you ask me in some of my older discussions and even the decks we have talked about it, just to give a perspective, when we took over as a new team, we set a goal for ourselves. We said that, by 2030, we will be $1 billion revenues company organically. Obviously, inorganically, we can do much better. But we took a more tough target saying that we will do it organically with that. The next question is, along with inorganic, where it will be, but just to stay focused on the organic route, $1 billion. So fundamentally, the way we look at it is that we see at least 1/3 of the business, which is almost 2,500 crores, will come from the next gen technologies, in the next coming years, Archit. That's going to change the way the revenue mix changes, whether we like it or not. And 2,500 crores will only come from the India business unit. So the way I look at it, India will be a huge, independent business region by itself. And the other 2,500 crores will come from the current lines of businesses which will evolve. So the next gen technologies could be B2B, B2B or B2B2C, and it could be even B2C as well. Because that's where the convergence of 5G and cognitive computing could converge with other industries as well, where the industry specialization becomes very, very important. And that is where I think the bulk of our revenues will come, and that's where the profitability mix will change drastically for every company, the way we look at it. And we want to focus on that route in terms of changing the revenue mix.
Yeah, thanks. So you mentioned this ambitious target of $1 billion by 2030, right?
Yeah.
I mean, to achieve those kind of numbers, I mean, what is the strategy relating to talent, relating to sales? I mean, any thoughts on those? Like, how would you, I mean, gain that kind of attraction?
Yeah. No, great question, Archit. So it's a great question. The first step we have done is there are two parts. We have to build the sales armada. Fundamentally we need to have a powerful sales engine. So first thing we have done is we have been repurposing our sales engine across the world. And in fact, we had a global sales meet right now. We had all the folks kind of that top everybody. We increased our coverage. We have brought in very serious talent into the organization. If you see that, we have brought in very senior leaders from the market join us. We have Sax Krishna, ex-HCL, Atos, Minax, joining us as Chief Growth Officer. We have brought in Sushant Purushan as the India Business Head for Digital IMS, ex-IBM. So we have brought in the best and best, if you see it. And all of us are aligned to that common, goal that we are all professional entrepreneurs who are here to kind of, build this organization and create value for our shareholders. So that's one. Second, now we are bringing the next line of people. We have been able to bring in the next line of people. So one is a formidable sales organization we have built, which will focus extremely on enterprise and mid-market, very focused on mid-market. We want to be a formidable force in the mid-market. We don't want to waste our energies on the enterprise segment. We'll be very selective about it. I'll give you an example. In US, we want to stay focused on credit union banks and regional banks rather than focusing everywhere. I'm just saying as an example. We want to be super focused on that. So that's on the coverage. Second, we also want to stay focused on the SMB segment. SMB is where we want to build our Nure-powered edge services, which is our Nure Cloud, which is going to be a business process as a service or SaaS as a service, a software as a service is what we want to focus. So as I'm speaking to you, we're going to launch our own eGRC, which is our global risk and compliance platform, which can be hosted in our cloud, and it could be a pay-per-use model. People can subscribe, and we can do that and very easily configure it. So the SMB segment is where we are also working to see how we can offer all these processes in a box as a one-stop shop for the SMB segment. So that also will give us the volume business, the SMBs, and our margins will come from the mid-market is where we are looking at it. We want to stay focused there. And to your point, in parallel, we have to build competencies and capabilities. So the other thing we are doing as part of the new 3i, if I expand the I's, it's innovate. We are innovating new services, solutions, orchestrating new offerings, incubate and invent. So incubate and invent is what we're doing is we're quickly bringing together our ecosystem of startups, who have got some, maybe we have to catch them young. We've been successful so far. We're catching some of these startups and spot some real good technologies, bring them into our fold, and then we are able to build our own customizations, our products around it. So that's the quickest way we want to kind of get to market. In fact, our Nure Edge is a classic example. What we now launched is the core platform technology comes from a Silicon Valley-based startup, but we have invested around making it commercial grade, making it Oracle Cloud ready, kind of make it and we're kind of doing the entire go-to-market for them. So that's what is in it. So we kind of very, very carefully using our resources in terms of building these capabilities. So that is the orchestration of various capabilities we're building in some of these areas. Plus, we are also bringing entrepreneur in residence, Archit. So the important point is that there are a lot of entrepreneurs, professionals who want to kind of make that plunge, but they are still holding back. So we've been able to attract some good entrepreneurs who have joined us right now. to build unique services because they are fed up with our corporate life, and we are giving them the safe net to be entrepreneurs. And we kind of come up with very interesting compensation schemes for them to stay motivated. And that's the way we've been able to attract talent. And we've been successful so far. In a short, in the last 6-7 months, the amount of progress we've made, I think it's because of this innovative models, I would say, because otherwise it would be very difficult to be able to retain and attract talent to be able to do that very quickly. And we want to continue doing that and, get in like-minded people, who will be able to kind of, align and, deliver this together as a team.
Thanks for your answers, Thompson. I have a few more questions, but I'll join back the queue for the same.
Sure. Thanks, Archit. Yeah.
Thanks. Participant, if you have any question, please raise your hands. I think Pawan has unmuted yourself. Pawan, you have any question?
No, sorry.
Archit, you can continue with your question. There is no more question in the pipeline right now.
Yeah, I mean, thanks. So one thing on IMS, you mentioned IMS is close to 35% of revenue, right? So and in this world where like everything is shifting to cloud, people are talking about big growth in cloud for the next few years. So how do you see this business going forward? And out of this IMS, what part is legacy? What part is new gen for you?
No, good question, Archit. Is one of the important parts for the run business, which I spoke about, what we inherited also is that how do we change the revenue mix of this 35%? Also, we're working with customers to now say, how do we fortify it by making them, migrated to the cloud, make them hybrid. So that's one thing which we are doing. So that also helps us safeguard our revenue and also increase the kind of margins we are doing that. So that's an opportunity which we are having. It also kind of expands it. To your question, currently out of that 35%, almost 20%, 25% of that is cloud first. And the balance is a traditional IMS. The traditional IMS is where we are now trying to see how we can migrate them. And, and the new businesses, of course, are all cloud first led, Archit.
And at the start, you mentioned about, improvement in gross margins. And can you also talk about what the margin trajectory be? One is like by 2030 when you're like targeting a $1 billion kind of a revenue. And one is what can be the medium term targets which you would be happy with in terms of margins, and what are the levers for improving the margins?
So one of the things which I've kind of, openly committed to even our investors and shareholders is that, in 3 years, we will hit a run rate of 1,000 crores with 100 crores EBITDA. So that's a target we have committed. And we want to work towards that because that's our first goal. Though it might look low from a peer level perspective, for us from where we are to go there, it needs a huge transformation of, quality of revenues, because the important point as you spoke, most of the revenues have to be replaced, Archit, because some of them are legacy revenues. They have to be disrupted. They have to be replaced. So the first 2-3 years is kind of, building that foundation of building quality revenues, quality customers, quality profits. I think that's where we want. Then our ability to kind of, scale will be, go really, fast. Because then we could probably in 5 years, we could hit easily 25%, EBITDA levels very quickly, Archit. And this also, I'm trying to do a kind of what I call internally as a blood commit, like a must-do number if I look at it. Obviously, we want to do much higher than that, Archit, if I may put it that way.
Understand. And these ambitious growth estimates, and we know that like all the companies are talking about very strong demand. So what portion of that demand is driving these numbers? So what I'm trying to ask is, let's say after 2 years down the line, the demand slows down. So do you still think that, you would be able to achieve all the numbers which you have?
Yeah, absolutely. I'll tell you why it's a great question, Archit. It's a fantastic question. Because the way I look at it, 1 year from now, not even 1 year, mark my words, 6 months from now, once the dust settles down, there is going to be a scramble among a lot of IT companies. Because today you're just growing the wave, you're riding the wave. Once it settles down, until there'll be very few companies who will be able to survive the change, basically because they'll have to change the business model, they'll have to change their entire operating model. For us, it's unique, it's uncanny coincidence. April 1st was a new reboot for us, and we are preparing for the future. So if you ask me, we are better better prepared than a lot of our peers because they are under the regular pressure running quarter to quarter, in their own strides right now. Now, for us, what we are doing, since we are hungry, we are now already thinking about disrupting others, Archit. So we will perfect the art of disrupting in the next 2-3 quarters. So classically, I will tell you, any traditional IT company which is very careful today, carefully kind of planning the revenues, it is all linear, end of the day, it's all FT driven revenues, whatever we speak about it. But for somebody like us to fight back, we need to disrupt that. We need to disrupt the traditional way of doing business, and we are starting to do that. So for us, I think we have a good head start, Archit. When the dust settles down, once it stabilizes, the companies will survive who are future fit. Otherwise, they're all going to be gone because this is a temporary bubble, I'm telling you.
Okay, and two more things from my side, Thompson. One is on attrition, which again is an industry-wide phenomena. So, like, companies like big names, TCS and all, are giving two wage hikes. So, and with the scale, which 3iinfotech has. So, how do you see that as a challenge in the overall scheme of things? And second question is on the sectoral mix. If you can highlight a bit on that, like which are the key sectors, how are things performing and all. Yeah.
See, on the people strategy, Archit, it's a very core issue for any IT company, correct? Even in a human mix, it becomes even more difficult because we need to have superior human beings managing the humanoids, correct? So I can't have average people. So your people capability has to be superior to be able to coexist with humanoids. That's the first problem statement. And now if you look at a lot of India-centric IT companies like all of us, the biggest problem today is, we have a huge, a resource scarcity because all of us are fighting for the top 20% of talent, which is the above average talent. That's a huge problem. And we have a huge base, who needs to be reskilled, upskilled. Every company is kind of, struggling with that. So for us, for a small company like us, we can't, really fight in this, space. So we are very clearly, as I'm speaking to you, we are setting up bases in Eastern Europe. We're setting up, we have our hubs in Malaysia, Vietnam. So our needs are lesser. So we are able to kind of do that. And, some of these areas are also very cost effective, and some of them also are the same cost or slightly higher cost. We get better capabilities. So we are de-risking that. Secondly, from an India perspective, we want to go to tier 3, tier 4. So that is where we want to go. In fact, as I'm speaking to you, we are talking to a lot of tier 3 engineering colleges and cities where we want to kind of adopt them and try and focus on some of the COEs. In fact, as I'm speaking to you, we are seeing how to build an Oracle COE in some of these tier 3s. One in Guwahati or one in Aurangabad or somewhere else. I'm saying as an example. Then on the top end, you'll see a press release in 1 month. We are now opening up. We are in the discussions with IIT Madras for a research park for a 5G hub. And we are now innovating with them to bring back, it's a nice buzzword, my marketing talks about bringing the moms back to work. So we're trying to bring back IT professionals, women who have taken sabbatical to come back along with IIT Madras. In fact, our first batch of 5 employees have been hired. We want to kind of ramp up that to around 50, 100 people. That's the other strategy. Finally, gig workers. It's a borderless workforce. I think, we need to kind of go beyond this, border perimeter-driven, infra-driven stuff. It's borderless, flex force. It's a kind of a gig economy. So we're now building some platforms to see how we can integrate that as well. So these are the broad strategies. De-risk too much dependence on India, diversify into, say, Eastern Europe, Canada, Ireland, Vietnam. These are some of the areas where we're now trying to kind of, focus, de-risk, have very focused COEs, and also go to our tier 3, tier 4 cities in India, build COEs and a supply chain of human capital, very focused on our practices. And finally, also the kind of, the gig economy is where it is going, Archit. And to your question on focus on sectors, see, we have been a kind of a strong BFSI government broadly, that has been our strength so far. So we're investing heavily on telecom, media, and entertainment as a vertical. And because telecom also helps us in both ways. One is telecom as a target segment, plus also telecom as a vehicle for us to attack other industries. Say, for example, a lot of telcos are now getting banking licenses across the world. Say, for example, we're working with a deal in Africa, where the telcos are now got the banking license, and we are now trying to see how, with our banking expertise, can we help the telco build risk assurance services. So things like that is where we want to specialize and move on. And there's a convergence of telco and healthcare. So those are some of the areas where we are focusing. Emerging verticals in industry, Archit, we want to stay focused on agri-tech and green tech, which are the two areas where we want to stay focused. Because they're still virgin territories, and we can probably have a bit of head start compared to our peers.
Thanks, Thompson. Last one for me. I mean, what are the key 2-3 risks which you see, or maybe which would be worrying you to achieve these kind of goals? That's it. Thank you.
The risk for us is, Archit, for any company like us, we've been in business for, almost now 25, 27 years, and, it's like, as we are focusing on the new 3i, obviously we need to insulate ourselves from the past. That is one. And hopefully we kind of insulate ourselves so that we don't have any surprises, we don't have any, risks which are there for the organization. That's one. That's very important. The risk for us is also, we need to have a balancing act, because we need to manage our current profitability and also kind of manage our future expansion. So it's a kind of a very tough, task for us, because as we manage the run effectively, we also need to invest smartly in the future. It's a tough one. We need to be very, very careful and do that, and also try and see how we can also probably at the right stage infuse more capital to the organization as well, just to fuel the growth as well. So these are some of the things which we need to manage carefully and in a timely manner to ensure that our business plans are executed. Actually.
Thanks a lot for the answers, Thompson, and all the best. Thank you.
Thank you, Archit.
Thank you, Archit. Participants, anybody have any question, please raise your hands. Thompson, I have one question. When you said that two questions basically. One is related to 5G, and if you can tell me what is the percentage of revenue that we get from CME?
See, for us today, CME is a new vertical today in all practicality. It's very, very limited small revenues which 3i gets today.
Okay. Okay.
So CME vertical, but we have taken it as a focused vertical for us. So CME is a focused vertical. So we are investing in it. And my background with a bit of telecom also. Now I've had my stints with telecom. And also it's a kind of a good area for us to focus and network and start off, because telco could be a customer as well as a partner for us. That's the way we look at it.
Yeah, because the reason I asked this question is I have done some study around 5G subscriber addition, and I'm astonishingly surprised by the number of subscriber addition, especially in last 2 quarters across the globe, especially in Europe and US.
Absolutely.
So it is very clear that 5G is not at the planning stage; it is at the stage of execution.
Absolutely.
And also 5G has 2 angles to it: B2C and B2B.
Exactly.
So at what in which area we are present, and what is the kind of traction we are seeing there? Because some of your large competitors are talking about 5 times increase in 5G revenue growth in last 1 year.
Absolutely. See, we want to stay focused and see. I can't go fight with a tech Mahindra. Let's be very clear about it. Okay, they have a head start. So we need to find our own niche area. So for example, even within 5G, we want to stay focused on MVNOs, MVNEs, or maybe our challenger telcos in a particular area. I'm not going to go to the number 1, number 2, because big boys are already there. I'm going to waste my time there, actually, to be very honest.
Right.
The second thing we want to focus is we want to provide edge services. So I'll give you a classic example.
Yes.
Now for 5G, we'll provide edge cloud.
Okay.
So for example, what is an edge cloud? Maybe I'll take an India example. India, we don't have 5G, but I'll give you a small example. Let's say there is a cloud in Bombay, okay? And let's say the operator's there in Bombay. I will provide a cloud or what do you call it, edge cloud, which is more closer to the consumer in, say, Lucknow, or even interior in Gorakhpur, or wherever. I'm saying as an example. Okay, it's as close as that. So this micro data centers linking up with an edge cloud will be the way forward. That's point number one. The single biggest problem, every company, every service provider or everybody, the telco will be very happy, but the user is not going to be happy. I'll give you an example. Now, the data explosion is 10x.
Yes.
Unless we segregate the data at the edge, the amount of storage required will be unviable for any business.
Right.
Where we want to focus is on the edge. Can I provide data analytics to ensure what data to be stored, accepted, or even rejected? As simple as that.
Okay.
It's a simple service. As an example, I'm giving you. Second, I'll give you a use case. Now, analytics at the edge. Now, do I have to go to the data center or the cloud to do the analytics, or can I do it at the edge? We want to focus there. And I'll give you another use case. For example, let's take a content use case. Now, if you take a telco and you take content, there could be multiple content service providers. One of the use cases we're working is how do you use blockchain in a 5G environment to have traceability and a revenue share mechanism using blockchain. So there could be a citizen journalist who shoots a particular video, he uploads it, and then it gets reshared, used by various people. But how does he get that revenue share? So we can do that seamlessly using blockchain at the edge. So these are some of the use cases. I'm just giving an example, top of the mind. Some of the use cases. Correct. Where we could, do that, and that's what we want to stay focused and invest in the CME space as well, Devishish.
Right. And in terms of B2B 5G opportunity, where do you think we are? According to me, I think we are still 1-2 year away in terms of B2B 5G opportunity. And according to me, that is a more important game as a IT service provider for us. So do you think that we are kind of 1-2 year little late there? And what is the kind of opportunity we see there?
No, I'll tell you, as I'm speaking to you, I'm talking to see, the good thing is a lot of my peers are all CEOs of various telcos. Okay.
Right.
So some of the telco peers we are talking to is, we are saying, boss, I will be your backend IT services provider. Now, every telco, if you ask them, they'll say, I also want to become a software company. You ask any telco CEO, he'll tell me, Thompson, I want to become a software company. I want to be an IT services company. So there's a convergence of all this happening. Now, for example, in a scenario where I'm talking to somebody, okay, in ASEAN territory, I told him, you realize your vision, what you want to be. He says, I'm no longer a telco. I am a end-to-end technology provider. That's the way he's positioning himself. So I'm saying, I'll be the back-end guy who will do all this for you. Now, for example, even if you do a 5G rollout, let's take a scenario. He can, right from making his infrastructure 5G cloud ready to creating edge clouds, to do everything, he needs somebody to do that. So I can be that guy who does that. Because he doesn't have the wherewithal or the know-how to make it happen.
Correct. Right.
Right.
Because what Ericsson is talking about, that B2B 5G opportunity is $700 billion in next 10 years, which is a huge number. Yes.
Yeah. No, that's another example. See, what you spoke about Ericsson, I'll give you. Some of the hardware vendors and everything we are talking about also today, the biggest opportunity is now SD-WAN and FlexiWAN.
Okay.
And we're now focusing on SD-WAN FlexiWAN. It's a huge opportunity, I'm telling you, because SD-WAN, FlexiWAN can be sold in B2B even at a premise level, at a factory level. So this is a big opportunity. Now, even we are talking with the likes of, Ericsson's, everybody else. I'll give you a small example. Even for them also, let's take a use case of Alien World, which is a SASE product of theirs. Now, even that, they need an SI partner like us to build a COE and manage it end-to-end. For, let's say, for AT&T, as an example. Right. So AT&T will not want to manage the SASE managed services end-to-end. They need somebody like 3i, or through 3i is too small to deal with AT&T, but at least through an Ericsson, we can work with that. As an example, I'm saying. So there are multiple opportunities. We are also tying up with, the telco partners like, Ericsson or Cisco. All of them are got their own hardware embedded, but there is a huge opportunity for SD-WAN and, FlexiWAN services as well. In fact, we are working on certain opportunities in SD-WAN and FlexiWAN as well, Vishesh.
Great. One question I have on one of the comment that you made about settling down of demand that is very pent up today. And now this is very different as compared to what I'm hearing from your large cap and mid-size peers. They are saying that we are surprised by the sustainability of demand, and we are seeing this at the 3 to 5 year cycle, at least. Where you are saying that in next 2 to 3 quarters there could be a settling down of the demand. So, where is this difference in, in terms of market that you are seeing and they are seeing?
I'll answer this, Dev. See, if you look at it globally, fundamentally
Okay.
post-COVID, if you
Okay.
look at it, honestly, we're not gone back to our real demands pre-COVID. Let's look at it from an overall GDP perspective. So what is happening today is just cannibalization.
Okay.
It is one industry which is cannibalizing another industry, one vendor who is cannibalizing another vendor. So that is what is happening. So
Okay.
fundamentally, it is shifting of revenues from one bucket to another bucket. That is one.
Okay.
The
Okay.
cannibalization could be if I'm a digitization vendor, I have huge opportunities because I'm cannibalizing a traditional FT vendor. So that could be huge demand for me. Now, after all this, it will settle down. Now, post-COVID, if everything returns and if the world gets back to a growth syndrome, then we will probably see the growth happening. Otherwise, look at it this way. Now, if there is no growth, we are just cannibalizing each other.
Correct. Correct. I understand that. One last question from my side as related to pricing. Some of your competitors are very clear that we are able to pass through the cost inflation that we are seeing in the market today, especially to the newer deals, newer customers. What is your experience there, and do you see realization improvement? Because I am hearing this statement in at least after a decade, that there is a realization improvement that we are seeing in the IT service business. So, what is your experience on that side?
No, absolutely. Devashi, I'll tell you what, so we've all been in this industry for a very long time. See, what has changed right now? What is the drastic change which is probably accelerated during COVID? It's not like all of us did not know about it. It's like you are having a nuclear weapon, you never had the need to use it. That's about it. But today, everybody is using it, right? Now, what has happened is everybody is now accelerating the digital transformation on the client side also. Transformation cycles have become shorter. Now, with the mix of human rights have changed. So no wonder what I have to do with 100 people, I do with 70 people. That's about it. So obviously my GM is going to be 50%.
Yes, understood.
Which used to be 30% before actually. Right, as an example. So I think that is what everybody is doing. So today it's no longer a fashion statement saying that, oh, what is the digital worker and human worker mix? It is part of your commercial model. And your customers anyway expecting it. He says, boss, I don't care a damn. Your rate per transaction or rate per unit or whatever it is. I'll tell you one of the deals I closed right now is after we take over the existing IT assets, ongoing managed services, I just have a simple rate card for every new customer, my customer onboards. That's about it. He doesn't care a damn. He says, per customer, I'll pay you X dollars. That's about it. It's all end to end.
Yes.
It's up to me. How do I deal with it? He doesn't care whether I put 100 people in Navi Mumbai or I put it in in Timbuktu or I put humanoids. He cares a damn. He says this is my number. That's about it.
Yes, and that is very clear from the utilization number that industry is working with today. If your client is worried about number of people sitting on the bench or number of people available, you cannot work at 90% capacity utilization. Exactly. That is very clear.
Exactly.
Understood.
Absolutely, you're spot on. No? So our entire IT model has changed.
Yes.
That's the whole crux now.
Correct. And and it is also giving us pricing power and automation at the back end, so better margin.
Exactly.
Right. And so possibly the non-linearity theme that we are hearing for Indian IT for a decade, which never played out in numbers, possibly in next 5 years, that will be that we are able to see that in our margins and all.
Absolutely.
So I am done with my question, sir. If there is any question, participant, please raise your hands if you have any question. Shuvankar, Omkar, Pramod, Rahil, anybody has any question, please? I think, sir, you have explained too much or we have asked too much.
Thanks. Appreciate it.
Thank you very much for your time, sir. It's nice talking to you. And thank you very much for all the participants to participate in the call. Thank you, sir. Take care.
Thanks a lot. Appreciate it. Thank you.
Take care, sir. Bye.